Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Happy Friday to you. And just a heads up, if you are interested in checking out DNA Funded, there's the QR code, makes it a little easier to get access to, and the promo code that you see on your screen. If you are up to the challenge, looking to get funded, I think they also offer, or they just recently have started to offer an instant funding program, which is pretty cool as well. So check them out if you are looking to get funded and up your trading capital. Might be a worthwhile direction for you to head if you do have the skills to pay the bills, as they say. Happy Friday. Hope everyone is doing well wherever you are in the world. It is morning time here, so I've got my coffee, I've got my charts. I am good to go. So obvious question, everybody asking, NFP, is it happening? No, NFP canceled. If you follow me on Instagram, hold on, I got to turn on this light really quick. That was going to bother me. NFP is not going to be happening here this morning because of the government shutdowns or government shutdown that is taking place currently. The funding for, you have to remember that there are real people and departments that go into putting out these economic reports. And so funding has stalled. So there is a delay in the NFP report. We'll see what happens with that. But again, once they sort out what to do next on Capitol Hill, we will wait until then. It's possible, guys, just so you know, too, that we could get a delay in the CPI print as well, depending on how long this takes place. I also have been I've been posting on my Instagram. If you do not follow me on Instagram, follow me there. I've been keeping everyone up to date on this. You could also follow me on Twitter. It's at TraderNickFX. Follow me on Twitter, on Instagram, wherever. But and maybe the easiest way to keep up to date, I don't know why I didn't think of this. The easiest way to stay up to date on this stuff, guys, is to join our Telegram channel. We're posting updates about it frequently. If you want to stay in the loop, if you're like, what is going on? When is the data coming out? We'll keep you updated. Just join the Telegram. The link is below me here. This QR code will work for you. Alternatively, if you prefer, I'll drop a link here. Let me just put the Telegram link there. Boom. Okay. So I know a lot of people are like, when's it happening? What's the report? Is it going to drop this afternoon? We will keep you updated. I've got a person on the team who is keeping an eye on this data for you. So if you want the updates, this is completely free. Join our Telegram channel. We'll be sharing trade ideas and, of course, updates on what's happening with NFP. Easiest way to stay up to date with that is just join the Telegram, turn on your post notifications, and we will keep you up to date. So, yeah, S&P 500 modestly higher here this morning. It's been strange, and if you look historically at what has usually happened during these types of events, here's the thing, right? Historically speaking, the volatility around a government shutdown is nothing, right? There's not a lot of directional move that happens in the stock market. Now, we have seen continued moves higher in gold and silver. I think this just makes logical sense if you think about it. Uncertainty around government shutdown, around, cutting costs and things that are going on in Congress between the president and everybody involved over there. They're fighting about stuff. There's this natural sort of drift, I think, in metals that's taking place currently, which could continue to bolster gold and silver prices higher. Dollar index, little mixed here this morning. I am bullish on the dollar. I've been making the case as to why I think that this has potential to continue to base out and actually move higher. I think the dollar index is likely headed back up to 98.60 and perhaps even that 100 mark. So my bias on dollar index remains to the upside. So if there's no NFP, what's the market waiting for to move? We do have services PMIs today. I believe that is still scheduled to come out at 10 a.m. And that's likely what the market will next look at. The market is also, of course, watching and waiting for what's happening with the shutdown stuff. Good morning. How are you? Question. I was looking at your stock videos. Are you also using the fibs for stock trading? Yeah, I mean, I pretty much mark up charts the same way with stocks that I do with everything else technical wise. The difference would be I just focus a little bit more on the financials. Also, I got to show you guys something. Check this out. So if you don't have a stock box, my hope this year is that you pick up a copy of the stock box. If you already have Edge Finder, you should also get stock box because we're building some pretty cool stuff. So check this out. I've been, wanting to do some studies on, historically speaking, how expensive are we in stocks? And I wanted to show you guys something that I found. So if you're somebody who watches the NASDAQ, what you're looking at, I've selected the ticker XLK. That is tech stocks. So tech stocks make up the largest portion of the S&P 500 that they ever have in history right now. Tech stocks have been the monster winner for this market over the last, 2 decades, really. Tech has been the big time winner. But I wanted to see just how expensive are we relative to history right now? Because, you have the stock market, you have the NASDAQ, take a look at the NASDAQ. You can zoom out, take a look at a monthly chart. And you can see, this chart has had just nothing but upside really since the, 2022 bear market that we had. We've really just nothing but rallied. And so I wanted to do a little bit of a study and say, how expensive are stocks relative to the earnings that they generate? Remember that ultimately what drives stock prices higher is not necessarily the economy, not necessarily, geopolitical stuff that's going on. What ultimately the real driver of stock prices is earnings. How expensive are stocks relative to their earnings? Well, the answer is pretty dang expensive. Check this out. We're looking at the historical PE ratios for the XLK. We've got data that goes back to 1995. And the average PE ratio for tech stocks as a group is somewhere in the neighborhood of 23 to 24. Okay. Yes, everyone who's here for NFP, I mentioned this earlier, NFP has been canceled or postponed due to the government shutdown. If you want updates on when the NFP report will come out, we're watching that, and we're going to be sharing updates inside of our free to join Telegram. Scan the QR code on the screen below my camera, or simply click the link in the chat down below if you want updates on this. What I'm talking about right now is the stock market as a whole. Is it expensive or is it cheap? The answer is it's very expensive. Now, that doesn't mean that the market has to crash tomorrow, but I wanted to share this with you guys because if you are somebody who is, you're watching stocks and you're like, these things just keep going up, what you do have to understand is that you are talking about stock valuations that are very, very expensive. And what does that mean for performance? Does that mean stocks are going to come down soon? Well, maybe, but what it more so means is that from historical studies, when you have very high valuations, it typically bodes less attractive for like 5 to 10 year out average performance. So right now, this is a crazy thought process because stocks seem to go up every single day. But tech stocks being valued very, very expensive significantly reduces the chances, in my opinion, and from historical studies, that you're going to get similar performance going forward. So if we've averaged like 12 to 15% gains per year for a while, and that's bolstered up the expensiveness of stocks, right? This expansion in valuation, the very expensive stuff, right? These things got expensive. That meant stock prices went up dramatically relative to the earnings that these companies generated. The reason I'm sharing this with you is that what I think is more likely to happen in the coming 5 to 10 years is you're not likely to get 12 to 15% out of tech stocks. That's my opinion. So when I take a look at stocks, do I want to aggressively buy at these levels? No. From a trading perspective, I at least want to see some pullbacks into areas of key support levels. I do like the idea of buying tech stocks as a trade, but as an investment, I don't know that you're going to get crazy high amounts of, gains from here. Just to reiterate to people who are just tuning into the stream, if you buy full margin, nothing is likely to happen in the next few minutes because NFP has been postponed. As I keep mentioning, government shutdown, postponed NFP. We don't have the NFP number today. It has been delayed. That being said, as I've said several times on the stream, just to reiterate, if you want updates on NFP and when it will be dropping, we are going to be monitoring for that in our Telegram channel. Scan the QR code or click the link in the chat to join our free Telegram, where we will keep you up to date on NFP and other key metrics that are coming out. Again, the government shutdown stuff, we're monitoring that inside of our Telegram, and we'll be updating everyone there. Stocks will crash next year. I mean, maybe. I'm not necessarily calling for a stock market crash, but I just think you have to understand, like, this is why we look at data, right? We look at data to say, are stocks the place to invest right now? And in my opinion, from an investor perspective, from a longer term perspective, my answer would be no. Like, I don't think that the time to go investing heavy into stocks is right now. There are dips that come along in the market. Like, for example, in 2022, we had a good stock market sell-off. PE ratios actually came back down to the historical average. And that was a great time to load up on stocks. In fact, I did that and I did really well in that period, loading up on tech stocks in 2022. But understand, where a lot of people will make the mistake is they're going to go buy super high risk tech stocks right towards the top of the market. Now, I'm not saying the top is in today. I'm just saying I think that, you're more likely to get subpar returns buying the stock market up here than if you were to get some sort of discount. Prices come down, valuations come down a little bit, we cool off, and then the cycle kind of could continue. I'm just pointing out that I think you have to be really careful chasing something, because people do this. People do this every single day in markets. They look at what's been going on and they believe that that's the new norm. We've had an up market. People are now believing the market only goes up. And guess what? When stocks were selling over here, guess what my YouTube comment section was full of? The bears. The bears were extremely loud. Some of you guys who are my longer term friends of the channel who've been watching for a while, I was obnoxiously, pointing out that bears are getting super loud over here. And everybody who was bearish in that time, I don't want to say I played it perfect, because I bought stocks here, I bought stocks here, I bought stocks here, I bought stocks here, I bought stocks here. I bought the dip on this one. The whole time I was doing that, people were calling me an idiot. Like, my comment section was ruthless. They were like, why are you buying stocks? The stock market's going to crash. Everybody who was leaving those comments got absolutely smoked. Again, I'm not saying, oh, well, yeah, because I knew better and I'm the brilliant trader and investor and I'm always right. Definitely not. NFP is not out. We did not get data unless we got a surprise release, but I don't believe we did. Yeah. Yeah. So unemployment rate, yeah, no updates. U.S. government data may be impacted by a shutdown. Tentative events are subject to delay, revision, or cancellation. So again, a longer term view, in my opinion, would be really careful chasing stocks up here. I think you're due for dips. You're due for pullbacks, and if we're drawing a fib from the low to the high, this sounds crazy, but a move back to 6,000 in the S&P 500 is not impossible to happen. That would be a correction of 10 or 11%. Very normal, right? Do you prefer buying direct stocks or buying calls? I like to buy shares of ETFs or stocks. When will we get the data, Nick? Don, I mentioned this earlier. The data has been delayed due to the government shutdown. I know I keep repeating this for everybody who's in this stream, but I'm trying to keep everybody informed. Data has been delayed for the NFP report. If you would like updates on that, we are monitoring the situation and sharing updates in our free to join Telegram channel. The link is in the chat right now. Join right here if you want access to the updates on NFP. But yes, it is delayed due to the government shutdown. We knew this was the case. I shared posts about this all over the social media yesterday. We are delaying, or NFP has been delayed until the government shutdown stuff sorts itself out. Which trade idea do you find interesting right now? Yeah, let's get into some ideas. I do like oil to the long side, but I don't like the technicals. So if I just take a quick look, let's do some research. By the way, if you want access to the stock box and you are already a member, just so you know, we're offering existing Edgefinder users. If you want to also pick up the stock box, if you're interested in stocks and ETFs and options and that sort of thing, you can also pick up a copy of our newest software tool. I mean, I say new, we've been building it for the last 2 years, but if you want access to the stock box, here's how you can do so. Click this link here in the chat. Or in the live stream chat to speak directly to a member of my team. Let them know you're already an Edgefinder user and they'll give you a substantial discount on the tool. Or if it's easier, you can just scan the QR code to chat directly to our support team here on our website. There you go. Yeah. So anyways, if I'm taking a look at oil prices, so oil prices have completely fallen apart. I bought oil over here. Initially moved to my favor. I trimmed my stop loss just below this low, ultimately stopped out for a loss, and price has continued to fall apart. Do I want to buy it now that we're hitting this even longer term level of support? I mean, I do think oil is due for a bounce, but I don't like the technicals. So I'd be interested in a oil long position again if we were to start seeing some higher lows and some breakouts. So I know that's a big picture perspective, but I do want to keep updated views on things that I'm looking. So I like oil to the long side, but I don't like the technicals. So I'll wait for a better outlook. Ball out. Frank moved on from A1 trading. He's not with us anymore at A1. I hope he's doing well. He's living his best life. So anyways, let's see. What else do we have? So if I'm looking at Bitcoin, that was another. Let's see. Bitcoin. I'm watching for a pullback on Bitcoin. This might be a better trade idea. Andrew says Stockbox looks cool. Do you teach about stocks as well? I only see FX and indices. So I trade stocks significantly. I have a second YouTube channel called Trader Nick Stocks. Just search up Trader Nick -stocks. So if you want to see me talk about stocks more often, that is my secondary YouTube channel. Just search it up on YouTube, follow me there, turn on post notifications, etc. And you can keep up with my stock trading ideas where I use the Stockbox constantly. Stockbox is, if you are interested in getting Stockbox, if you want some resources about the Stockbox, if you chat in with our support team, they can also send you the free course that we offer on how to use Stockbox, how to better implement it in your trading. If that is something that you're interested in, Again, easiest way to do so is to chat with our support team. Link is in the chat, or you can scan the QR code that is below my camera. Okay, so I like Bitcoin quite a bit. 38.2% retracement, maybe. Yeah, look at this. I like this setup a lot. Bitcoin, if it were to pull back, looks good. Can you give an update on gold? Yes, I will take a look at gold in just a moment. So, NFP delayed. We talked about this earlier. I'm gonna keep repeating myself, but NFP has been delayed due to the government shutdown. No idea how options works this day. Baller, are you talking about me or somebody else? I love options trading. I've traded options since 2022, and they have been, they were like the newest thing that I started trading a couple years ago. And I absolutely love trading options. I typically sell options for premium. Anyways, so Bitcoin, looking for pullbacks in this one. Got you, ball out. Appreciate you, man. 38.2% retracement looks interesting to me on Bitcoin. I do see some upside there from a trading perspective, not necessarily an investment. If I'm taking a look at indices, I do like the indices as well, but I think they have plenty of room to pull back before I can get involved on these guys. So if I'm looking at SPY, for example, you're going to get the US stock market opening up. Sorry, hold on. I'm sharing the link to Chris so he can join. Okay, boom, boom. All right. Okay, there we go. There we go. We've got just a little bit here before our next show host comes. So I'll go ahead and bring Chris Pulver into this. Let me see. What changed to get Bitcoin a +9 reading? Yeah, I mean, Bitcoin's getting a strong reading. You can break it down. If you ever want to know why the Edge Finder is scoring something, just look at the top setups page and it will explain it to you line by line. COT data looks good. Seasonality, which the change in the month shows positive drift in the month of October typically. Trend is to the upside. Like, you can break down the score and understand it for yourself without my explanation just by going through the top setups columns. That's why this table exists, is just to keep you kind of like line by line. Why is the Edge Finder bullish or bearish on something? But yes, Bitcoin to me, especially with the breakout, the technicals look great, right? You've got a beautiful upward push breaking through this consolidation area. So yeah, that's part of the reason why Edge Finder started picking up a bullish reading. Let me bring in Chris Pulver here on the stage here. Let me just switch over our camera view. And here he is.
Good morning.
No NFP today.
I was going to say happy almost NFP, but
yeah,
didn't print today.
Exactly. Happy no NFP day.
That's right.
Markets are mostly quiet, as you might expect. Chris, I have a question for you.
Okay.
So if we don't get NFP, and let's say this thing draws out, we don't get CPI.
That's 2 weeks away. That's a full, that'd be an extended.
That would be long.
Yeah. Anyway,
I think we probably will, but let's just say for argument's sake that we don't. Like, let's say it stays drawn out. Does that start to get the market's attention at some point?
Well, it's funny. I found I mean, leave it to social media to find all these gems. It was 2011. Trump had a comment where it's just like, government shutdown is absolutely the president's fault. He needs to bring people together. It's like, I mean, we've probably
not when he was president.
Very few could say that he's an inclusive president. I think he's pretty divisive. Inclusive when it comes to bringing Republicans together because they just want to toe the party lines. It's crazy how sensitive politics have become the last decade. It's now probably just as sensitive as talking religion or anything else that people get offended by. You talk politics and it's
Chris,
like the worst conversation ever. Are you offended now that we're talking
I'm
about
already offended by you saying that. That offended me.
That's pretty much how it goes.
So here's my thought. If the government shutdown continues for too long, I don't necessarily think like the state that they're, just because they're shut down, and debating things. I don't think that's what would freak out the market, but rather, what does it actually mean to like the state of the economy? I saw something where it's like the longer it stays down, it actually can start to ebb away at GDP because you have a lot of people who are unemployed or
Sure.
who are like furloughed in meantime. But again, I think that's kind of like a couple weeks away from really scaring the market.
I think so too. I think that honestly, we'll probably see some type of olive branch extend over the weekend. I would imagine there's going to be talks about it, maybe some resumption next week. All we really saw happen this week is government shutdown. It's first week of October. We've got the 99% probability that the Fed's going to cut. So all it really did is cement the rate cut for October and December. And then everything else just kind of remains the same, where from the cut cycle of September of this year to next December, so all the way out to the end of 2026, it looks like we still have a solid 5 cuts. So I really didn't see much change outside of the market, poked a high yesterday, kind of close flat for the day. But what I'm not understanding here, and this is all, subject to changes, we know with the watch tool, but rate cut, rate cut, rate cut, rate cut. And then how do we go from like the percentages showing like another rate cut, then back to a hike? I don't know why the Fed would have any reason to cut 5 times, then possibly raise 1 or 2 times going out to like 2027. So again, the percentage is really low, so I doubt that's going to be the case. But I think we don't know who the Fed chair is going to be next year. I think the Powell's going to continue to serve out his term. That noise is kind of settled down where, I think we can't fire Jerome Powell. So let the guy serve out his term. The Fed is cutting. You're getting dissent among the Fed. We'll find out kind of more how that game plays out at the end of October. But yeah, this next week, no major data in the U.S. next week. But we have CPI, PPI the week after. And then at the end of the month, it's Fed and PCE. So it's kind of a nothing burger. If the government resumes, maybe what we have to see is maybe job numbers are printed. Like government resumes and you have to say, hey, that non-farm that would have been today, October 3rd, this is what the BLS would have released. And maybe it's terrible, maybe. But I don't know, man. I just think that we same conversation yesterday. We are silly to fade this. I think buying volatility is smart to just kind of anticipate. You expressed to me you've got November expirations, December expirations on the VIX. I think that's a good play, whether or not we see it or not. But the price action is until we take out 65.70, 65.50, until we take out this 21 period moving average. This is not a market that has any interest in going down. So yep. Sideways, I think sideways is a real direction that we probably should see, because like it is getting ridiculous. Like if we are talking about this next week, Nick, and we're up to 68 or up to 68.50, 7,000 seems like it's very gettable for the end of the year. In fact, what's 20%? 20% is like just over 7,000 if we're a 20% year-to-date SPX.
Which is typically how it goes, right? Like rarely, have you ever seen this thing, but like rarely does the market actually hit the average. Like we know in the last like really great 10-year period or whatever, the stock market returns like 10% on average, or 11 or 12% average for the S&P 500, but it rarely actually comes in around 10 to 12. Usually it's either minus 15, minus 20, correct, or plus 20, plus 30. So yeah, that feels like the market just wants to just keep ripping to the upside and keep doing this thing. I also wanted to just show you this. I know I sent you a message about this, but we finished the tool last night within the stock box. This is just looking at some of the valuations, not just across the overall market, but specific sectors. So we are looking right now at XLK, which is the technology sector ETF. We are in the 90th percentile this year of valuations. Like we are talking about a very expensive, you're talking about high 30s PE ratios on average for tech stocks. If you take a look at the broader market, S&P 500 is also in the 90th percentile. If you take a look at the NASDAQ, right? NASDAQ also just about in the 90th percentile here. Of course, we can go through the list. Utilities, obviously, with the data centers and all the build out stuff. Have those. I would argue maybe there is a little bit of room for some expansion on PE ratios, but we talked about this and we've said this on stream, but it's nice to have some data to go with it. There's nothing that's cheap out there. Like there's
Right.
it's very hard to find stocks or sectors. I mean, even precious metals, like nothing is really giving you discounts and cheap across the spectrum. Even healthcare is still, not cheap relative to its
Right.
own history. I mean, even though it's the lagging sector of the year, we've talked about that. It's a difficult environment because what the natural question for a lot of traders, a lot of investors starts to become is, well, I have money sitting piled up or on the sidelines. Where do I park funds? Where do I get long? And for investment purposes. But the tricky thing here is that you just have nothing cheap. And what typically happens is not necessarily, calling a top in the sense that in the short run, we think stocks will come down, but rather in the next, to your point about maybe sideways consolidation, like maybe in the next 5-10 years, maybe you don't have the exceptional average yearly returns that we've had in tech stocks. Maybe you do have forward-looking returns that are not as attractive. I made the point earlier, just before you joined the stream, that I think that the risk to reward to buying the NASDAQ right here, right now, is just not great on a forward-looking return basis. Like, yes, you probably will drift higher over time, but I'm thinking you're probably not going to get 20, 30% years from here, in my personal opinion, based on studying history, looking at valuations. They're not cheap. And so for you to get 20 to 30%, you need them to get even more expensive than they already are. That's really what you're trying to make the bet on, is you think if you're buying NASDAQ heavy here, you're making the bet that you think tech stocks are going to get significantly more expensive, because where real gains in the stock market come from are not just, earnings growing, but the price paid for those earnings, the valuation on the market continues to really explode. And I just don't know that we're going to get that. So in my opinion, I am bullish. I like the idea of staying with the trade that's worked, but waiting for opportunities where that price to earnings, even though it's the simplest, oldest, metric in the book, I'd just like to see them a little bit lower before I can step in and buy stuff.
Sure. When we saw the correction February, March, April, Mag 7 price to earnings was, I think, 33 times earnings. And I think it dipped to like 22 or 23 when they corrected. Now we're back up to 29, 30 again. The average PE was, I think, from 22 down to like 17 or 18. It's funny that you mentioned the forward returns, because I actually talked about this in the mid-year review that we did. This is the price to earnings annualized for the next 1 to 10 years out. So, I mean, because of these valuations at 20 plus, it's pretty lackluster. I mean, honestly, we have some scatter plots here that show, on the high side, 10%, but most of it is single digits here, Nick. Like, even the positives are 3, 4, 5% on average, but you're getting a lot of the, -5, -10. You see a lot of these scattered in at like -10 and 20. You had mentioned, it's not that the market usually hits the market 10%. What we typically see is, I mean, the average return for the S&P is around 8 to 10%. You include dividends, buybacks, everything kind of juices this market. Let's just say 10%. Well, to make 10% a year, that probably means you're going to have to require a 15 to 20% drawdown at any given time.
For sure.
At any given time. And granted, we did have a 20% drawdown this year. And I think where most of the money is made, and what we've seen the last 20 plus years, is if you just have cash to buy 10, 15, 20% pullbacks, that's where the most wealth is created. And I mean, and so a pullback, a sideways period is one thing. I don't think there's a lot to stop this market. I do, I haven't really used the phrase everything bubble, but when you and I were talking yesterday offline, it's like, it kind of does feel that way. I mean, we're sitting at crazy high valuations. Real estate's at all-time highs, and the unaffordability of real estate right now in the U.S. Bitcoin nearing all-time highs, gold at all-time highs, silver nearing all-time highs. I know there's other commodities like due to take off. Bonds is maybe a big question mark, but
crypto.
I'm not trading crypto. I'll trade Bitcoin. That's about it. I had a good run in Ethereum this year for the Pulver alerts. That was a one and done. My holdings now, it is Bitcoin. I did close out a trade yesterday. Alibaba and Baidu have been really solid. I closed out Baba.
Nice.
I'm still holding Baidu. I've got Baidu. I'm taking a target at 155. So if we go to the chart here, I mean, they've had incredible runs. I've had an interesting story here with the Chinese stocks because I did, I participated in these back in like 2022. I mean, I was I was stupid enough to trade in 2022 and just sit on them for 2 years. So I've had shares in the low 70s.
You've done great with them. I mean,
yeah, I mean now 2-3 years
sure.
later, I've done great. But
well, same with think about all the people who, I mean, you did this too. Silver, right? Silver has been a dead trade for so long, and here you go. You've got an incredible trade on in silver. Guys, Chris has been loading the boat on silver. I think you said yesterday from 2020, right? Like you've been in
since
this
COVID.
move.
Yep.
Like that's a big commitment. I have another thing to bring up in the chat here. Tahiti says the next 10 years are all about the emerging markets. So many good companies and many emerging markets are more stable than the US these days. I mean, I got something to show you here. So what you're looking at here, guys, this is EEM, which is the
emerging markets.
I have the symbol right? That's EEM, the emerging markets.
Correct. Yep.
Yeah. So emerging markets, this is a ETF that tracks a whole bunch of stuff. You got, I believe you have China in here, you have Brazil in here, you have all these different companies, prominent companies around the world, ex-US. And what we're comparing here, I've built this chart using EEM/SPY. This is the emerging markets fund versus the stock market in the US, the SPY market weighted. And this thing has been an absolute pain trade. If in the last 10 years, you have been making the bet that the broader international stocks are going to have a catch up or have an outperformance period, you've pretty much lost. Like you've been on the wrong side of that trade. However, in the 2000s, emerging markets kicked butt compared to the S&P 500. So if we are talking about shaping up this idea, I think Chris, you and I are both on the same page where, okay, we look at that study that you shared. That was an awesome chart, by the way, where we look at the forward-looking returns when you have high valuations and they're not great for US tech stocks, or specifically, I mean, nowadays, the US stock market is tech. Like it's all tech. So if we're looking at that and we say, well, is there a contrarian trade here over the next few years to broaden out into some international stocks? I like the call personally. I think there's not, there's a lot of these international stocks that are much cheaper. Now, I'm not saying abandon US completely because I still love the story for US tech stocks. I just think that they're expensive at the moment. So maybe there's an opportunity to pick up Brazil, India, China, on dips and stuff like that. So I don't know. What do you think about that, Chris? Do you think emerging markets have better risk to reward profiles than US stocks, or are you not buying that?
I don't know about better, but I would say it's one of those opportunities where the large cap US has outperformed so many things for so long that it's just, if emerging markets just don't suck, it would probably be as good or better because the US is so difficult to keep performing at this pace. The way I would probably trade EEM, it's certainly cheap enough as an ETF. I wouldn't mind looking out maybe to like 2027 and going synthetic on this one. So let me see if I can find how far out can I go on EEM.
Would you be selling puts kind of thing?
I would do synthetic. So what I would do is I would sell a put and buy a call at the same strike, and that creates a synthetic long position. So I can benefit from essentially it's a very low cost debit as opposed to number one paying for the ETF for 100 shares. And I also could buy another put to have downside protection. So
it's like
I want to see how far out I can go. Yeah. So instead of, let's say I have to buy 100 shares, it's going to cost me $5,400. I could probably do an option trade on that, and it's going to cost me maybe $1,000. But now it's about timing. So if I want to go out and say, all right, Nick, for the next, I can go out to December of 2027. I can go out to January 2028. If I think we're going to have some type of outperformance, I could sell a 54 put, buy a 54 call. It costs me $1.65 to be long. So it only cost me $165 to be long, just like I had 100 shares. Now that's a pretty cost-effective way to trade it. And what I would consider doing is, okay, if I do this for $1.65 and I buy an out-of-the-money put, now for $500, I can be synthetically long, like I have 100 shares. It only costs me $500, and I have a downside protection at 50. Because if I look at the stock chart, I mean, 07, 08, here's one thing that will happen. If we have a nasty, nasty correction, if we have the everything bubble and everything's going to go down, well, I certainly don't want to be stuck holding the bag at these highs, right? Sure. I mean, this was 07, 08. This thing was down, I don't know, 70%. How about, 68%. And then we had the 2020 melt up, and 2020, once we had the bottom in COVID, it's up 90%, and all of a sudden it drops and gives back a ton of it. It's down 43%. So it doesn't look like the timing is great when you're buying this thing on the run to the highs, but obviously once the highs are reached, you've got some good upside. I think that the weird part is right now it feels like everything you're long has more risk to the downside than it does the upside. I mean,
I
we
agree.
clearly have to like blow the top off of everything to really get the upside that I think you'd want to have at this point.
But it's a weird thing, Chris, because the thing is, for me, I would say the same thing. Like, I think if you are talking about like buying and holding something for the bigger picture, I think the risk is greater to the downside than to the upside at this time.
Yeah. Protection is key.
But if I'm being like, if I had to pick a direction, it would be up. Like that's the weird balance where I'm like, okay, if I'm not trying to time, I think there's a down move in markets coming. I'm just pointing out that I think the risk reward, like if you were to say, I'm going to go heavy Mag 7 and just sit and wait, I think that's not a great longer term investment right now compared to if you wait it around for a little bit and see if you get some volatility to the downside. I think that's a better pickup there. So macro wise, just a quick update here. I'm looking at the macro screener. If this looks different than your Edge Finder, if you're an Edge Finder user, the reason is because I'm not using the Edge Finder, I'm using the stock box, which focuses in a lot more on US stocks and US sectors within the stock market. So you can see like our top macro sectors currently are getting things like consumer discretionary, sniffing out rate cuts. The Russell's getting a good score here. Tech stocks. I mean, these things are in momentum to the upside, and the macro still looks okay to support that. Now, when this changes, we want to be aware of that, right? When we start to see GDP numbers not so hot, when we see PMI's numbers coming on not so hot, we want to be watching that because that will change the impacted sectors down here. Overall stocks impact, though, still really strong. I mean, you still have great retail sales numbers, GDP growth. Sure, jobs market data has not been great, but you can't only look at one thing. You got to look at the whole picture. We had good jobless claims last week. We didn't get it this week because of the shutdown. Job openings better than expected. Like, it's hard for me to paint a picture where I'm like, oh, we're going into recession right now, and that's going to be the reason stocks drop. I just don't see it just yet. And so I do think that the greater risk from a longer term perspective is to the downside. But you and I have talked about this. In some ways, we're still finding ways to trade this melt up, right? Still being involved, but keeping finger on the pulse. I mean, to me, this is the pulse. I'm a macro trader, so I'm very focused on what does the economic data suggest about the environment. And right now, it still suggests stocks can stay strong, but I want to be aware for when that changes dynamics. Also, just a quick plug on this, or in terms of plugging it into gold, I mean, gold and silver rocketing higher. I actually think that the macro has shifted a little not as favorable to gold. I'll just explain that really quick. With all that growth metrics data that I just got done talking about, when we look at US economic heat map here, in relation to gold and silver, you can actually see down here that we're getting some negative macro scores. Reason for that is that, again, a lot of growth metrics coming in strong is not particularly attractive for gold, right? If the Fed, doesn't need to cut rates as much because the GDP growth is still outsized to the upside and PMIs look okay and inflation is still sticky, this creates a less favorable environment for metals. So big picture, I am still bullish on metals. Short term, I actually think they have room to pull back. I'm not shorting them because I don't like to short uptrends like this, but I think metals are due for a pullback. Would you agree, Chris? I mean, I know you mentioned yesterday taking a little off the top from silver, which you've done phenomenal on. What's your thoughts there on metals?
If we end up hitting, so I've got XAG. If we end up hitting $49 to $50, then I'm probably going to trim my position back. I know that we're close to it right now, but I mean, there's just such a good looking chart. I think that we're only in a wave 3, even though this is an extended move. To my measurements, we're only in a wave 3 right now. So I think that even a pullback, like a pullback to, I mean, we're trading at 47 and change, almost 48, a pullback to 40, 41, 42 again. I think that's a buy the dip on silver. And I think we make a pretty compelling move into 50 plus. But if we hit 49.50, I trim it and then I wait with puts. I wait to buy the dip. And, I let a good, 4 or 5 year position go, which will, it's time. It would be appropriate. But I still want to load up. And I think it's going to be very different because I'm usually a base hit trader where I'll take hundreds of different positions and base hit. But now going into 2026, I'm really looking to simplify allocations and just have protection to the downside, but also have the, hopefully price appreciation where I spend a lot of time with core positions, lowering my cost basis, and just kind of getting the overall allocation where it's not too heavy in equities. It's pretty diversified between small, mid, large caps, as well as non-US. And then also have gold, silver, Bitcoin on the balance sheet as well. So I think that's what I have to do moving forward. It's kind of streamlining and simplifying, but also trading lots and lots of active options around it. So you'll probably see that more in the Pulver alerts. And I think what I'll start including, Nick, is if you're comfortable with it, including some synthetic plays, but the synthetic play will also include a protected put. I think if I just do, we talked about EEM, right? So if I go option strat and I build this out, if I went out to, I'll do a synthetic long and we'll build this on EEM. Okay. So I was going out to, I think it was January 2028. And I just sell the 54 put, buy the 54 call. It looks like this. So I pay, this like $1.60, $1.65. If I add a put into it, let's say I add the 50 put. So I'll add a 50 put there. What that just did is now I can gain all of the upside and cap my downside.
Yep.
So that's probably the way to do it, where it's cheaper than owning the shares and I have a downside protection. So if we do have a nasty spill, I mean, again, if I was doing this at the beginning of 2025, this is how I lowered my cost basis on Tesla since the run up of the election, and then it dropped 55%. That's how I lowered my cost basis Tesla down to like 230, 240. So when I was resuming buying on Tesla, it was already down 50+%. I've done this on MicroStrategy. I did this on Coinbase. I've taken some of these rides where, holy crap, the stock is way down. But thankfully, a trade like this, I can ride most of that down, and my break even is usually within, let's say $5 to $10 off the lows.
Sure.
So you can ride the downside a lot better this way, and you don't feel as bad when the market all of a sudden takes a nasty nosedive.
Yeah, no, I like it, and I think again, just being prepped for a larger sell-off with buying the put makes kind of sense, just in case you do get that downside move. Chris, we got to run. You got to move on to your next part of your day, and I also have our next show host coming in here in just a second. Chris, before you go, everyone who wants to check out more content from Chris Pulver, you can search his name, Chris Pulver, on YouTube. You'll find his YouTube channel, or on socials, you can find him there. And then also, if you are interested in getting access to the Pulver alerts, which is the trading signals that Chris shares with inside our Discord group, you can get access to that by sending a direct message to our team. Just let them know you were watching the stream. They'll get you set up with Pulver alerts for a stream discount. Chris, thanks for coming on today, man. Have a nice weekend.
Yeah, happy Friday.
All right. See you, man. All right, guys. Real quick, I'm just going to do gold, and then we are going to bring in Marco for his commentary on what is going on here with markets. So just a quick plug also, if you guys are not in the Telegram channel, take a second. I just got a notification from the team here that we are looking at some updates on NFP. If we get any further details, again, this is why I said you should 100%, if you're not already in here, join the Telegram. It's free to join. I'll drop the link here in the chat for you. Join Telegram with this link here. And yeah, so if any updates come out about NFP, we're monitoring the situation, and we'll keep you up to date within the Telegram channel. Free to join. You can also, if you're watching from a TV, just scan the QR code that is below my camera. Gold, I mean, we're just sitting at highs. The thing looks like it just wants to keep moving in momentum, not shorting it, not long. There's not a lot for me to say about gold. I mean, buyers are still in control. Yesterday, you had an attempt from the bears. We did not close bearish at all. Buyers came right back in. And here we go. We are pushing back towards those highs. Would not be surprised if we are just making a move back up to 4,000. Shorting gold to me sounds just so silly at these levels, because momentum just favors this. You have a government shutdown taking place. You have central banks buying gold aggressively. Look, I don't actually like it long myself at this level. I'd be interested in looking at it closer if you had a pullback. But I mentioned this earlier, the macro doesn't look exceptionally bullish for me with gold at this time, because we've had some really good growth metrics out of the US economy. The US dollar actually looks, in my opinion, like it has more upside, which would cap my bullishness on gold in the short run. So my opinion, I think dollar actually has more upside. I think gold is due for a pullback. I will not short gold because I don't think you want to short this chart. The chart is too bullish, but dollar, I actually think, has some upside. We've been stuck in a range. I think we fundamentally have more room to make a push higher. Okay, guys, don't go anywhere. We got Marco taking over the stream here in just a second to talk about trading ideas and things that he is watching for in markets. I'm going to play this quick break, and then we are going over to Marco. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I do hope everyone is doing well. What is the big news for this week? Well, it is probably the US government shutdown, and because of that, you can see that some of the data has been delayed. So we were supposed to have NFP. It's no longer going to happen. It's probably going to happen after the shutdown, after the government reopens. So once they get more data. And when is that going to happen? Well, if you look at the historical examples of US shutdowns, this is nothing new. This is not a new thing. It can last anywhere from a couple of days to a couple of weeks to maybe even 35 days. I think the tops in the last 20 years, the maximum number of days that the US government shutdown lasted was 35. So it's not a big deal. We do have the jobs market data from ADP. So ADP non-farm employment change, which came in very bad. So much lower than the forecast. Also, we had revisions. So the September number was 54K and the revisions are now -3. Okay, revised from 54. So that's a big difference. What is this? Why is this being released while NFP is not being released? Well, this is done by a company not under the US government. So this is done by a private company, as far as I understood. So these numbers are going to keep coming out. What about the Fed Watch tool? Let's take a look at the interest rates. So what can we see in terms of the interest rates? So 29th of October, 97.8% chance of a cut. We still have, will the shutdown reopen before the 29th of October? Well, probably. The probabilities are in favor of that happening, but also it may last for a bit longer. A cut is pretty much guaranteed. And then on the 10th of December, we have 87.5% chance of another 25 basis point cut. So nothing much has changed so far. Other than that, in terms of the data, we do have ISM services PMIs. We did have manufacturing PMIs, which came in kind of very close to the forecast. JOLTS job openings, which came in a bit higher than forecasted. Okay. So we had this week, we had the RBA cash rate and rate statement. It actually came in hawkish. So it came in bullish for the Aussie. We saw some movement on the Aussie CAD. Went up quite nicely. We have Aussie dollar. Also, I think it went up quite nicely. So that was a nice reaction. Let me check the comment section. So Hey, Ballout, what's up? DXY up to 100, then we go to 95. Let's check it out. So DXY to 100, and then we go to 95. That is the forecast for Ballout. And I think I'm pretty close to your forecast. I think I have a pretty similar opinion. So I think short-term upside for the dollar is likely to happen. And then I think we're going to range around this general area. So something like this. Up, 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 and then we become kind of range bound and flat. Do we crash lower? I'm not sure that will happen. I don't know what would be the massive catalyst for a massive sell-off on the DXY. So I'm much more likely to bet on a bit more upside or range bound price action on the DXY. Okay. Hi, Mihefit. I hope I didn't butcher your name, but welcome to the stream. Can you explain how buying a call and selling a put works? So I have personally never traded options in my life. The reason is, for me in Europe, it's a bit tough to get access to trading options. That's the first reason. It can be done, but it's a bit harder than US. And then second thing, I think I don't have enough capital for options. Minimum, I would say at least 50K to 100K in your personal account is needed if you want to trade options and trade them efficiently. Okay. So far also, third reason, prop firms don't support options. Unfortunately, I would very much like that they do support options, but there's currently no prop firm offering options trading. So a bit tough to expand my capital through trading options. That being said, there is great tutorial, great videos on the topic of options on Trader Nick's channel. So he has made some great detailed videos where he pretty much explains all of the details in buying or selling options. So I highly urge you to check out his channel. Why is USD CAD crashing? USD CAD, well, I wouldn't say it's crashing. I mean, I'm focusing on the daily chart and I would say it's doing pretty well. It's sort of trending higher above the 20 MA, pretty close to my take profit. So I'm not complaining. That's just the general moves. That's just the general movement of the price. In a trend, you have pullbacks. So this is nothing out of the ordinary that we're getting these smaller pullbacks. Okay. Are we currently in a scenario where we buy the rumor or sell the news? I think you're talking about the US government shutdown. In my opinion, it is not a tradable event. It could have been tradable right at the start. You could have, for example, sold UJ, because usually UJ sells off when a shutdown is announced, and then it goes back to previous levels soon after that. So if you didn't participate in this sell-off right there, I'm not sure that you have a big trading edge with focusing on the US government shutdown. So I would just do my general analysis. I would not even take this new event into account. I wouldn't say it's an extra confluence to buy or sell anything. I would just say it's mostly noise. That's at least what my research from prior events is telling me. Gold pushing to the upside slowly. Yeah, I think gold is up on the day. Check gold in the edge finder. Yep. So we can do that. Let's quickly check gold. Whoop. Gold. Neutral reading on gold. As far as the price goes, we just seem to be exploding higher and very little pullbacks. Very, very little pullbacks. Do you want to go short because it's overextended, because it's far above 20 MA? Absolutely not. I personally would not dare to go short gold or silver. Do I want to buy? I personally don't want to buy at these levels either. So I do want to buy, but at some cheaper levels, at some lower levels. If we can pull back to some support, I would be very happy to get in on buy setups. Unfortunately, seems like the price has gone parabolic. It's so far away from 20 MA, both on gold and on silver. So I'm just being patient. I'm looking for pullbacks. Looks like we're going to have the scenario where we had a couple of those quite recently. Here, see, we were just exploding higher, but then I managed to get in here on the pullback. So that's what I'm looking for. Or here, exploding higher, and then you can get in on this pullback, for example. This is also another example where the price has gone parabolic to the upside. Very little opportunity to get in on a pullback. So I'm looking for this pullback, this sort of a pullback, and then I would get in, right? So I'm looking for a couple of consecutive red candles, bigger red candles, to just see that the momentum has been exhausted and to get in at a more favorable reward to risk. So if I get in here, I have to have a pretty big stop loss. My target is unknown, but if I manage to get in here, I can put my stop loss a little bit below that level, and my first target can be the highs. So that's a much better proposition. Okay. Ryan says, how are the markets going to react with no data releases? Well, that is a good point. What moves the markets the most is data releases such as NFP, CPI, PPI, interest rate events. I mean, we still have the Fed. So the Fed is going to happen on the 29th of October. I think that's going to happen for sure. I'm not sure if the Fed is impacted by this shutdown. I don't think it is. But anyway, you're correct. We may not see a lot of activity on the US dollar until the shutdown resolves. But what you still have is you have a lot of our other currencies. You have the yen, the pound, the euro, the Aussie, the New Zealand, crypto, stock market. So you have a bunch of other stuff where the news keeps coming, keeps producing trends. For example, this week, the DAX has had quite a big explosion to the upside. Bitcoin has been moving steadily higher with some really nice momentum. So there's always something to do in the markets. There's always something. There is always something to trade. So I do want to take this opportunity to mention, if you guys want to get trade signals, learn how to trade, get fundamental analysis, get breakdowns of these fundamental events, or just socialize with other like-minded traders, you can join the A1 Discord. And you can use my discount code, which is MARKO. So you can join the Discord, and this code also works for the Edge Finder. If you want to get this software, I use it daily. It is the most important thing for my trade execution. It sort of brings me the biggest confluences to buy or sell something, and you can get it with a nice discount using my code, which is MARKO. So if you're interested, make sure to check it out, and I will see you in the Discord. So, for example, Aussie NZD, I'm looking for buy setups once the price reaches this level. If everything is basically, if everything fits my plan, this is probably going to be a new signal in the A1 Discord to buy the Aussie New Zealand dollar. So let's go through with the comments. Do you think the shutdown will affect the NASDAQ? I don't think so. I mean, the NASDAQ just keeps on trucking, just keeps on exploding higher. S&P, same thing. They just keep grinding higher. They don't seem to care about the shutdown. Just how the markets work. Sometimes they respect fundamental events. Sometimes they just have a mind of their own, especially when there is a massive bull run, when there is a massive explosion in value. Then it just keeps on going, and no one knows when the trend will stop. So what you can do, what is the best thing to do is to just ride the trend until the bend at the end. So dance until the music stops. Once you get a clear reversal, well, then the buying is done. But until that, you can get some nice buy setups inside of these massive moves. Unfortunately, I didn't catch any of the pullbacks. I didn't get in at the right time, but there's going to be more trends. There's going to be more opportunities. There's always an opportunity in the markets. Pure manipulation, the market maker not happy. I'll stay watch until next week. Macbeg says, Marco may ask, are you from Croatia? Yes, I am from Croatia. How is your prop firm challenge coming along? So I sometimes show you the DNA funded challenge. That's been in, I think, minus 1%, minus 1.5% drawdown. And what I do is I get signals from ChatGPT and I put it into the challenge. So I use ChatGPT to trade a funded challenge, basically. I thought that was a pretty cool experiment. It's also a series on my channel, which you can follow if you're interested. And in the last 100 days, ChatGPT is up with the signals around 20%, which is pretty nice with very minimal drawdown. I think minus 3% was the maximum drawdown. I'm short the Aussie dollar. Am I dead? Well, fundamentally, I can only tell you my opinion. Aussie, in my opinion, is a strong currency. The dollar right now is also kind of a strong currency. So with that, it doesn't really make a lot of sense for me to place a trade. When I'm looking to trade Forex, I need one currency to be strong and I need the other one to be weak. That gives me the polarity that produces trends. When both currencies are strong or when both currencies are weak, then you get flat and sort of range-bound price action. So Aussie dollar, not my favorite thing to trade in terms of the fundamentals. If you have a different approach, if you have a different trade idea, if you have a different trading edge, then stick to the plan. But if you're asking the question, then you may not have a good enough edge. So what I would advise, if you are not following a specific plan, if you're just kind of trying to get in here, get in there, I would just pause with live trading and I would first develop my strategy, develop my edge, do the back testing, do the live trading necessary, live testing, and then you can go ahead and put on bigger size, let's say. Why is the pound weak? Well, in my opinion, the pound is weak, both. I think it's weak in the short term. So for short-term analysis, I look at this economic heat map for the UK, 50-50. So 50% of the data is coming out bullish. Rest of it is coming out neutral / bearish. So not a real bias in the short term, but then long-term analysis, if I take a look at my three favorite things, which is the GDP all over the place. Then you have the unemployment for the UK, which is, I would say, it's kind of rising in an uptrend. You know, we were at 4.2 a year ago. Now we are at 4.7. It was more than a year ago. Yeah, so I think we're rising in the unemployment, which is not good. And then inflation is a pretty big problem for the UK, 3.8%. Now that is tough to control. All of these metrics are telling me stagflation. Stagflation is bearish for the currency. Stagflation reduces the demand for the pound. I'm pretty much bearish on the pound. I think the two fiscal sinners, first one is the CAD, second one is the pound. So I'm shorting the CAD, I'm shorting the pound, or I want to short the pound. I'm buying, I've bought Aussie CAD, I've bought USD CAD, Euro CAD. I'm looking to sell the pound dollar if we break this support. I'm looking to buy Euro GBP if we break this resistance level. Okay, so that's my game plan. My favorite thing right now is to sell the CAD, sell the pound. Okay, let's see. Cedric asks, Marco, do you still trade with just technical analysis alone, or do you fully transitioned as a fundamental and technical analysis trader? I do still have my purely technical analysis strategy, but in the future, I think I'll fully transition to just trading this fundamental strategy slash. So it's technicals, fundamentals, seasonality, sentiment. It's a bunch of things combined into one. It's a lot of fun. It's a lot of data. You can do a lot of things. You can do a lot of research. So trading purely technical analysis gets very boring very quickly. And I think you can get a much better trading edge if you implement different types of analysis. So as I mentioned, technical, fundamental, sentiment, seasonality, housing prices, anything that you can get your hands on. So building a picture, building a puzzle, so much more fun, so much more engaging, and you get a much better trading edge. I would say your win rate increases, so your performance increases. It's easier on the psychology, and there's very, very little purely technical analysis traders that I've come across that have been profitable in a period of, let's say, 5 to 10 years. You know, most successful traders who are trading purely technical analysis, or they are not trading purely technical analysis, they are trading maybe 80% technical analysis, but they're fully aware of what is going on in the markets. They know about fundamentals. They're very, very proficient in fundamentals. They're following what is happening in the world. They're following the Forex calendars. So it just makes sense to transition from a purely technical analysis approach to looking at what else is out there. So I think it's just the way of a professional trader. You start very simple, and then you see, well, let me see what else is out there. Let me try to improve my edge, refine my edge, trade more things, get more percentage. Okay, let's see. With the government shutdown happening, it seems like the market is turning to alternative assets like gold and Bitcoin. Do you think that's true? In my opinion, the explosion in gold is not connected with the government shutdown. As I mentioned, I don't think the government shutdown is anything special. I don't think it's anything to be scared about. I don't think you need to panic. I think it's just something that happens once in a while, every few years. Gold has been exploding higher for a really long time now. Okay, a really long time. I mean, long time. Well, a couple of weeks. The government shutdown happened only this week. I wouldn't say it's connected. Bitcoin, well, you could say Bitcoin had the explosion up because of the government shutdown. I just don't see the connection. I just don't see the fundamental connection. Bitcoin is still a very much risk-on asset, following the NASDAQ, possibly acting like a technology stock. So yeah, basically, I don't think that is the case. And now it is time to mention the sponsor of today's video, which is DNA Funded. So if you guys are looking to expand your trading capital, make sure you check out DNA Funded. So this is a account I have for demonstration purposes. I'm just trading my strategy on it. You can see I'm up like 0.58%, and I have a trade running on Aussie CAD. You can get 25% off any challenge using our discount code, which is A1Live. Okay, so A1Live. So this code is specifically for you guys watching the streams, 25% off any of the challenges. What I personally recommend is two-phase challenge. And what I like is 50K or 100K size. So all depends on your trading style. Swing traders, again, depending if you're a day trader or a swing trader, you may want to choose a different account size. As far as the risk management goes, I take around, I would say, 2 trades per week on average. And my usual game plan is to risk 1% for the phase 1 and phase 2, and then I drop it down to 0.5%. Reason is, I want to give myself at least 10 losses before I blow the phase 1 or phase 2, and I want to give myself at least 20 losses before I blow the actual funded account. So yeah, if you guys are interested, if you want to expand your trading capital, if you want to go with a reliable prop firm and get a good price as well, make sure to check out DNA Funded. So my segment is close to being done. I'm just going to quickly summarize my watch list, and then I think James is after me. So I have the NASDAQ looking for buy setups, but I want to see a pullback. Gold and silver, pretty much the same thing. Aussie, New Zealand dollar, I'm very interested to take a trade. Aussie is strong, New Zealand is weak. I want to see a pullback to this level. And at this level, around the 20 MA, I'll be looking to enter buy setups. My target is, if we can load, my target is going to be around 1.45, let's say. That's what I'm targeting. That's the level I'm targeting. I'm in Aussie CAD, USD CAD, Euro CAD, just trailing those positions. All of them have been signals in the A1 Discord. So if you want to get those signals, make sure to join the A1 Discord. That's it from me. Thank you guys very much for watching, and I will see you next week on Monday. So good luck with your trading. See you.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Good morning, good afternoon, ladies and gentlemen. How's everyone doing? Happy Friday. It's the end of the week, and it's probably been the most boring week I've had in a long time. No unemployment, no average earnings, no NFP, yawn. So, how do you prompt ChatGPT to get signals? You shouldn't be using ChatGPT for trading. And analysis and explanations, fine, but signals, big no-no. Hey guys, good to see you all. Anyway, let's get started. I'm gonna be honest. I'm gonna be very transparent here. I did a big oopsie today, and it wasn't a big oopsie in like anything too major. It was just one of those things where I was like, oh my God, I cannot believe I made such a stupid mistake. So this morning we had a very bearish DAX. Now, because we have actually it's not that, sorry, I'm on the wrong time frame. We had a very bearish session for DAX this morning. So I was fading the move, looking for a reversion back to VWAP, blah, blah, blah. We also have, I think it was a German holiday today as well. So I was expecting slow markets, basically just range bound. Anyway, completely wiped out DAX for a bit of a larger loss than I would have liked. It was about 2.5%, 3% loss. And then I got trailed out of silver as well. And then it continued to rally up. So I had an entry around here yesterday. Decided, you know what, I'll stick to the DCA idea, scaled in here, got a really, really good entry. I did make money on this one, but it just wiped out by the loss on DAX. So I'm a little bit salty today. Really, really poor end to the week from me. Not good. But we live and learn. It's not a big deal. I think I'm ending the week negative 0.5%. So we'll keep going. Anyway, let's see what we've got. I was looking at the Dow for a potential long position, which actually just seems to have flipped on the open, because we do have the Dow with a very bullish reading of 13. So I was looking to potentially get in on a 50% retracement here if we could come back down and retest these highs. So it'd be a very typical break and retest pattern. Are we going to get that? I'm not sure. And I'm still in my S&P position, so I'm not really interested in being overly exposed to the US markets. But if we get the setup, I will take it. Also looking at platinum, actually. I don't trade platinum. I don't think I've ever placed a trade on platinum. But we are getting a bullish reading here of 10 on the edge finder, which did pique my interest considering that we are having gold and silver rally as well. So it seems like we're in a good environment for metals. So I'm just looking, maybe we could get some sort of pullback and I'll take a very, very small position and just see what happens. But again, there isn't anything here for me just yet. I would need to see very likely a 50% pullback towards the 200 moving average. And then, yeah, maybe I would consider it, but there is nothing there right now. Same thing as gold and silver. They're just a bit too high. As I said yesterday, I think I told you I took a sort of intraday position here. And basically just looking to benefit from momentum as we continue to break highs, which I did do. But in terms of my swing trades or anything major, there is nothing for me. So Nick talking about Bitcoin earlier, and I don't really watch Bitcoin or pay any attention to it, but I did really like what Nick said. We're looking for some sort of fib pullback into these previous highs. And again, we do have the Bitcoin reading very bullish with a score of 9. So if we can get some sort of retracement, maybe on Monday, Tuesday, whenever, pull back into these highs, I think I would then look to take a long position. There's not really anything interesting going on, to be honest. I think because we've had a pretty neutral week in terms of news, the markets have not really given us much. So New Zealand US dollar, again, we've got a bearish reading on the edge finder. So I was looking to see if we could get a 50% retracement into the 200 moving average, but it seems we've just completely slowed down here. There is an argument to be a seller at this point. We do have these previous lows then turn slight resistance. Now we're obviously seeing rejections again at this point. However, that's not the way I trade. So for me, I can't get in, but there is definitely the argument to be a seller at this point. Dollar CAD, again, I would love to be a buyer on this one. Just going off the edge finder, but yeah, overall there's just not really too much going on. Oh, I was euro pound. I closed this one for about 0.8% return. Just wasn't a huge fan of the developments here. Big wick to the upside after rejections previously, so I just decided to close it on a Friday. Realized the profits. What else have we got? Oh, pound New Zealand is interesting. So I was also considering taking this one just before I came on the stream. Again, I just can't really get in yet. I could do it, and it will be a very aggressive entry on my part because there is no 50% pullback yet. We're not near the 200 moving average. But I do like the fact we've had this pretty nice wick to the downside. We're still in a bullish trend, and now the current H4 is quite strong. And of course, we do have pound New Zealand with a bullish reading here of 9. So I like it, but I just can't allow myself to get into that one yet. What else have we got? Australian dollar CAD. Yeah, I quite like the narrative for it to continue higher, but again, I can't justify taking a trade at the point that it's at. We also saw, if I remember correctly, I may have misread this. Let me just double check before I start talking. Hold on, I need to go and cut data. Cut history. Fairly sure we've seen decreasing. Actually not too much, but COT is quite bearish on the Australian dollar. So it's kind of just one of those things where at quite a high level, previous resistance, COT data is not overly convincing to be a large buyer. Sorry guys, I've ignored the whole chat. Just give me a second. Oh, sorry, you were talking to Marco about the ChatGPT thing. My bad. What's the Friday evening plan? I think I'm going out tonight, actually. I'm not 100% sure what the plan is, but yeah, I think I'm going to go out for a meal and blow off some steam, seeing as we've just had the end of September, so yeah, that's about it. What about you? What do you think about dollar yen starting to look like you owe me the coffee? What do you mean? You said dollar yen back to previous highs. I think you owe me the coffee. Yeah, no, I'm fairly sure you've got that mixed up. You Ugle. I think that's how you say it. Really looking forward to next week. Charts ripening for technical setups. Yeah, I think you're right. I think we are almost there with some pairs, but right now there is nothing to do on my part. Phantom just went long pound Ned. Pound Ned's a new one. Pound New Zealand. I'll look at coffee and cocoa, maybe slightly later in the stream, just because I have absolutely no idea what's going on with those markets. So I'm not going to prioritize the analysis on those ones yet. If you stick around and ask me in maybe 10 minutes, I'll get back to you. Oh, you ugly. Okay. First quarter of 2026, you expect dollar yen to be back at the highs. I still disagree. I think there's still a lot of pressure on dollar yen, because you could argue the dollar might gain some strength, sure. But then what you've also got to factor in is the Bank of Japan hiking rates. I really don't think we're going to get, well, I doubt we're going to get a rate hike this year by the Bank of Japan. I think we're going to see the hiking cycle start in 2026. So if we've still got the Fed cutting rates, and then we've got the Bank of Japan hiking rates on the continued path to normalization, I just don't see any hope for dollar yen. We could see some upside, sure, but I just don't think we're going to really see, 158, 160 again on dollar yen, at least by early 2026 anyway. Okay, so what else do we have? There's not too much here. Seems like we've had a pretty flat open as well. It seems like the Dow hasn't actually moved in terms of price change. UK 100's doing okay. DAX is still down. Nasdaq's down as well. The S&P slightly down too. And the Nikkei, again, absolutely fumbled the bag on the JPN. So I've been in and out of the JPN for quite a while, actually, since sort of the start of September. So it's been almost a month since I've been sort of playing around here. This is the only successful trade I had. I had another entry right here, and it got stopped for break even. And then I took another long position around here, and then closed it because I just didn't really feel very comfortable with it anymore. And I've completely missed the ride. Not had a good period, to be perfectly honest. I mean, I'm doing fine in terms of P&L, but I mean, I'm just kind of off the game this week, I think. When you're just not quite with it. Friday night candle with dinners. Oh, sorry, Friday night dinner with candles and chart. Yeah, exactly. AKA, I'll be sat at the desk with candles. You ugly. I'm 99% sure you've flipped this the opposite way, because I don't think I was saying dollar yen would go back up. Because I've been bearish on dollar yen for quite a while. Bank of Japan, Bank of James. Yeah, just give me a couple of weeks. I'll be at the capital level of JP Morgan soon. I don't even know what the tell you what, drop the tickers for me, Luca, on coffee and cocoa, because this is how much I don't try. I don't even know what the tickers are. The precious guest said he uses ChatGPT to get prompts. I mean, ChatGPT is fine. I think AI is fine. If you can give it data. The problem is with AI, well, general AI. When I say general, I mean like the day-to-day chatbots like ChatGPT, Gemini, etc. A lot of them don't have current data. So you can ask them a question about the markets, and they might say gold's still at 1,900, or they could say dollar yen or the S&P just crashed 20%. Well, obviously that was a while ago now. Apologies, my camera's cut out. So it's not up to date. So as long as you can feed it data that is current and basically just ask it to analyze it, I think that can work. But obviously using it for should I buy or sell is absolutely ridiculous, and that doesn't make you a trader. Bro's not in the flow. I'm not this week now. Gold Buzz, where are you? Yeah, I don't know. Sometimes I'll look at gold and I'll just think about the guy I saw on Twitter that he's been selling it since, where was it? It was like down here somewhere. He's been shorting gold. It may have even been lower. And he was absolutely adamant. I'm fairly sure, actually, I probably shouldn't say that. But yeah, he was adamant that gold was going down. Nick knows exactly what I'm talking about. Oh, it's really funny. Yeah, well, that was rough. I still think that back and forth on Twitter still comes in my mind now and again. That was funny. Anyway, So I mean, UJ Short. Oh, you said it was going to rally. Okay, so you owe me a coffee then. I'm confused with what deal we've made. Karma, exactly. Yeah. Hi James, how are you doing? Well, can you check natural gas? Yes. So natural gas. Ball Out and I have been talking about natural gas for a while, and he's been trying his hardest to get me to buy it. And I do agree with the idea of probably being long. However, I was talking to my guy, my special agent guy who specializes in commodities, and he is looking to basically just be a buy towards the end of the year. I don't know why. I've got no idea. I don't trade natural gas. It's not my thing, which is why I consulted him. But I really like the look of this trend line here. So I would love to see price come back in here and then go towards 4. I could completely miss it. You know, I'm perfectly willing to say I could be sat here waiting and I just missed the whole move. That's fine, because at the minute I just can't justify being a seller. We're obviously in a bearish trend here. We've just had this daily bearish candle off the 200 moving average. The trend overall is quite bearish. I'm just not seeing any bullish signs yet. So I'm finding it difficult to really get in. But again, I do think we absolutely could see 4 to 4.5 on nat gas. It's not just me saying that either. I've read it in a couple of bank reports as well over the past couple of weeks. Is nat gas is quite a good buy, but the question is obviously when. So it's always the magical question. In theory, everything's a good buy at some point. You don't think it's going back down to 2s? Maybe. Thing is, I would rather miss out on profit than put myself at risk trading an asset that I don't understand. So risk to reward in my view. Gold, yeah, I've got about 10 minutes left. So if there's any questions, let me know. So let me just check the edge finder. What's gold doing here? I'd assume it's still bullish, is it? Am I blind? I can't see gold on here. Maybe gold isn't bullish anymore. Hold on, let me just double check. Yeah, gold is neutral. Interesting. So I'm going to be honest. Although the edge finder is neutral, I mean, it does have a slight positive score of 4, so that is something, but it's obviously not an overwhelming bias either way. You've got 2 approaches with the metals specifically. Are you a short-term trader or are you looking for a swing trade? If you're short-term, I really think just buying these small lows that we have towards the 50 EMA is completely valid. It's very aggressive, and I would never normally say that's a good idea. But because gold is just so strong, the pullbacks we're having are very, very minimal. And I've been waiting and waiting and waiting for an opportunity in gold. I've missed them all. So that's why I'd be quite happy to buy them now. However, on the other hand, if you are a swing trader, I would be looking more for key levels to get hit. So whether it's just a 50% retracement, whether you're waiting for a bear market to kick in to start buying some lows, when I say bear market, I mean 15, 20% drop. Or you could be looking at psychological levels like 350, 3,550, 3,700. You could be looking for those as well. Either way, I would be looking to be a buyer in gold until there's a very, very clear reason not to be. And at the moment, I don't have that reason. So a reason to be maybe a bit more cautious on gold is if we saw the Fed take a more hawkish pivot. So if we saw, for example, when we do end up getting NFP and unemployment and all the data we've missed, and even inflation, if we end up getting inflation inflation sticky or higher, we end up getting unemployment lower, NFP higher, and general better news overall, that would lead the Fed to holding and eventually maybe hiking later, maybe in 2026. So that could be the opportunity for gold to start taking a dive and people start taking serious profits out of the market. And then obviously maybe then you could look for some sort of position trades on gold over the long term. But yeah, I wouldn't be looking for gold to crash at the minute. I think that would be very pessimistic, and I think it would be ignoring a lot of things that are going on right now. AI boom supports a boom for nat gas. Yeah, I suppose that's also true. But the thing is with AI, I'm not that optimistic on it either. I'm very exposed to tech stocks actually. We've got quite a lot going on here. But I'll be honest, I think AI is very much like the bubbles we've seen before. And, when I say a bubble, I absolutely don't mean I'm going to sell those markets. I'm not going to be shorting Nvidia. I'm not going to be shorting any of those things. But I do think that it's very, very propped up on investors and not cash flow. When I say I think, that's a fact. Look at what ChatGPT is doing in terms of its expenses and how much it loses. It's not profitable, and a lot of these AI companies aren't really doing anything. It's more just investors pumping in money, hoping to make a profit at some point. And again, I just want to clarify, I'm not a stock person, so maybe I'm missing some key information. I don't know, but this is just from a sort of an observer's view. I think AI could absolutely rocket, for the next 2, 3, 4 years. I don't know, but yeah, I just have that sort of icky feeling about it that something eventually is going to break. And that doesn't mean, AI is not going to work and, it's all going to fall apart. I mean, the markets, I think, are very, very stretched. It's like what we saw with the dot-com bubble, and similar to 2008. Not in terms of like what drove 2008, but I mean in terms of mass optimism, and then it just comes crumbling down, So anyway, that's, again, humble, slightly uninformed view, but I wouldn't take that as gospel. I definitely wouldn't short those markets, but that's just my personal opinion. How do you look for a wife when you're a trader? Go to Bali, Dubai, one of those places. Just take some pictures outside an Airbnb and a Lambo. You'll be okay. Just list those pictures. You'll be all right. Or the method, what you could do if you really want a girlfriend and you're really down bad and slightly unethical, is start a mentorship. Don't actually launch the mentorship, just launch the website and the social media pages, buy some followers, and then you can DM all of the females and just say, look, I'm doing some free mentorship, and then you can make some friends. Again, that's completely unethical. Please don't do that. It's kind of, I'm joking. Method for you. See, what you've got to do, business, in life and in dating, is you've got to get creative sometimes. Because everyone's doing the same boring stuff. Anyway, right, we should probably get this back on topic. I've got about 5 minutes left, give or take. Okay, so what do we have? Nikki's still bullish. So I might look to re-enter on a long on Nikki if we can get a reasonable pullback, but I feel like I'm pushing my luck on Nikki. Nikkei, JPN 225, whatever you want to call it. Very elaborate method. Well, everything in life is all about input, and that's what gives you the output. John's full port. Nice one. I'll take a 30% performance fee, please. And I'll take a 20% consulting fee as well. Almost like it's being thought through. Now I've just got that high of an IQ. It just comes to me, you see. Okay, so again, sorry, I keep going off on tangents. This happens sometimes in my segments. I'm just a bit burnt out from the markets this week. So platinum, I think, could be a good long at some point. If we can see a reasonable pullback. Same thing as gold and silver. Bitcoin, I also quite like the idea of Bitcoin. I'd more be playing this just from the edge finder and just from technicals. I'm not a crypto guy, so it'd be pretty low risk and pretty small position in terms of targets, is what I mean by small. New Zealand US dollar, I may be a seller at some point. The problem is with the dollar right now is that I'm in euro dollar shorts, and my thing's disappeared here. We've just not got anything. So I really need to see the US data come out so I can start building a bit more of an opinion. Because although I do have a slightly bullish bias, I'm just slightly concerned that we're going to get NFP, unemployment, all the data just come out bad. And everyone that has been sat here, me included, saying that the dollar's bottomed, we've had this double bottom pattern, repeat and repeat, that's just going to break. And I mean, obviously, maybe not 80s, but it's possible that something's going to kick off here. I mean, of course, it's possible. Anything's possible, but hopefully, you get what I'm trying to explain there. That I don't want to be too overly exposed because I think we're on a little bit of a on the fence with the dollar at the minute. If we have continued poor data, those rate cuts are going to get priced in pretty aggressively, I think. However, on the flip side, I think if we get positive data, we're going to see a continued upside. So I just need to wait and see, really. You're on EU shorts as well. Last thing I'm going to say, actually, and then I'm going to end my segment because Nick's on his own today. I'm not going to make him sit here and watch for more than he needs to. So with EU, again, we spoke about this yesterday on stream. So for anyone that was listening to that one, I apologize because I'm going to repeat myself. But Eurodollar is currently sat at a very interesting level, which is this 0.5 fib level. Oh, I almost flipped my position there. Hold on, I'm going to change that. I just don't want to flip positions. So Eurodollar is sat at this 50% retracement level, which of course is quite relevant in pretty much any market. However, on a monthly, on such a major pair as EU, I think there's going to be a lot of eyes on this point, or at this point. Then we've got 1.2. Beyond 1.2, it's going to become a bit of a problem. When I say problem, I mean in terms of exports and inflation. There was also a report. Just bear with me. I'm just going to take a second to try and find this for you because it was quite interesting. It's basically, I'm going to do it for a second. I'm not sure if I can find it. I've got it. Right, I'll show you this. So JP Morgan says the fair value on Eurodollar is, hold on, is that the right point? Sorry guys, bear with me. I'm trying to find this for you because it's quite interesting. Yeah, maybe. Sorry. 1.1? Oh, anyway, whatever. I can't find it. Basically, what I was trying to find in this report was JP Morgan. It was back at the end of July this year, so it was a little while ago now. But they've used a fair value of Eurodollar down towards 1.13, I think it was. It was pretty low relative to where it is now. However, they're fading their idea because it's basically just built off models. It takes into account a lot of different things like economics and geopolitical landscape, central banks, etc., etc. And they use these models to build what is a fair value, also based on technicals as well, like average prices and VWAPs and all that type of thing. So there is that in terms of, is Eurodollar actually at a fair value? Maybe, maybe not. I mean, it depends how you look at it and what you use to define that. But it seems, and another thing I was going to show you in that report, again, I can't find it in time, unfortunately. It seems their target for the second quarter of 2026 is 1.21, which is about here. So if we could see that level get hit and we start seeing some bearish movement, we could see basically just profit taking from Eurodollar. And that, again, later on with fundamentals and all those types of things. Anyway, ladies and gentlemen, I think my time is up. I've got about 1 minute left. Oh, and Nick's here as well.
Hey, James. Yeah, no, I was just going to jump on just to react with you to services PMIs, then we can call it good. Also,
yes.
It's really hard to, for viewers, it is really hard to do like math or read while also presenting. But James, I saw your 1.1 number on that. It was just at the bottom of that paragraph. I just,
was it? Okay.
It's just difficult to speak, present. I do it all the time where I'm like, I watch back my content. I'm like, how did I not see that? But it's your very tunnel vision when you're presenting. Anyways, I mean, I am too. Everyone is. ISM services PMIs. I believe we are getting this number here in 10 seconds. Let's see if this does anything. We don't really have obviously the jobs report this week. So let's see what PMIs bring us. Okay, so came in softer than expected at 50.0. Expectations were 51.8. Just taking a look at the dollar in response, see if there's any volatility on this. Dollar index is pushing a little bit lower here, looking at the 5-minute. Let's see what else. Stocks actually moving a little bit lower here in response to this. NAS is down slightly. So yes, a miss in services PMI's numbers, and part of me wonders if the market will make a bigger deal out of this simply because it doesn't have other numbers to look at today.
Yeah, I was about to say that actually. It's like, yeah, I mean, what else does the market have to move on really, apart from services today?
Yeah, for sure. Well, James, thanks very much for coming on the stream. Appreciate your time as always. I know you mentioned you're going out for dinner tonight. Enjoy that, and have a nice weekend, man.
Thank you. You too. Guys, have a good one. Enjoy your weekends. I'll see you later.
See you, James. Always good to have James on the show. I know a lot of you guys really look forward to his segments. We're going to wrap it up there, call it good for the week. I hope everyone has a nice weekend. If you are doing anything, enjoy it. Take some time away from the charts. If you're not doing anything, maybe you get a chance to do some back testing. Just a quick reminder, I know there's a lot of uncertainty and questions about what's happening with the shutdown and jobs data and updates on that. We are going to keep you updated. I've mentioned this a couple times. It's free to join our Telegram channel where we will be keeping you up to date on what is happening. So we are posting, my team is monitoring the situation. We'll keep you up to date on charts, breakdowns, trade ideas, and of course, breaking news on what is happening next with the NFP reports, government shutdowns. We're still going to get the data. It's just a question of when. So stay up to date with it by joining the free Telegram channel. You can either scan the QR code below, or you can, if it's easier for you, click the link in the live stream chat that I just dropped there. So there is the link to the Telegram if you would like to join us in there. Okay, guys, have a great weekend. Thanks very much for tuning in, and have a nice rest of your day. See you guys.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.